Hey, good afternoon, everyone. My name is Joe Bacella, Director of Client Success with Chaikin Analytics, and I'd like to welcome you to How to Defend Your Portfolio and Profit in a Market Sell-Off. Presenting today is Sandy Chaikin of Chaikin Analytics and John NAJARIAN, also known as Dr. J of Options Monster. John NAJARIAN is co-founder of Options Monster and Trade Monster and co-lead analyst for Inside Options Trade Idea Alert Systems. He spent the first 29 years of his trading career trading in and around the pits of the Chicago exchanges. John is a frequent contributor to CNBC and the Wall Street Journal and other prominent financial media organizations. Mr. NAJARIAN has also co-developed and has patented trading algorithm, the Heat Seeker, used to detect unusual trading activity. Sandy Chaikin is co-founder of Chaikin Analytics, a groundbreaking stock research and analysis platform with no prior experience. Sandy started investing in 2012 with Chaikin Analytics and built a killer portfolio that continues to outperform the S&P 500 and most money managers. Sandy continues to find winners like American Woodmark and Activision Blizzard, both of which rose over 94% in 2015. Sandy is living proof that you don't have to be a financial expert to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy's a contributor to NASDAQ.com, where she also hosts webinars of investing using examples from her own portfolio. Throughout this presentation, please submit your questions using the GoToWebinar chat window. We will hold a brief Q&A session at the end of today's presentation. This webinar is being recorded and will be sent to all those who have registered. We'll be starting in just a few moments. Bear with us for a few more minutes. We're going to have Sandy Chaikin live in just a moment.
Joe, thank you so much. And John NAJARIAN is going to be with us shortly, so he will just hop on when he's available. So, as Joe introduced us, we're going to talk about how to defend your portfolio and profit in a market sell-off. And I'm looking at CNBC right now, and the title is Market Sell-Off. So we are very timely here. So let's get the little housekeeping out of the way before I get started. All investments involve risk. Past performance is no guarantee of future results. I'm obviously kind of highlighting here what this says. Investors are fully responsible for any investment decisions they make. Such decisions should be based solely on an evaluation of their financial circumstances, investment objectives, risk tolerance, and liquidity needs. Chaikin Analytics and Option Monster's reference to specific securities should not be construed as a recommendation to buy or sell that security. Specific securities are mentioned for informational purposes only. So I always like to start my presentations with outlining what the problem is, because that more or less frames the conversation that follows. So what's going on right now? Excuse me?
I said I can only imagine, Sandy, what with the problems there are in the markets, especially on a down 300-day. I can only imagine.
Yeah. Well, as I say, the title is pretty timely. How to profit in a market sell-off. Well, John, welcome. We wanted to get the housekeeping out of the way.
Sandy.
Thrilled that you're on.
Thank you for that.
Fantastic. Okay, so does anyone relate to this? Investors running for the exits whenever the market drops. I think a lot of us in the audience can feel that way right now. But there's a problem with that, and that is that we tend to lose. We lose 4% if on average, if that's what we're doing. So rather than that, think about the mean recovery time for market corrections, and we are in what is considered a market correction. It's down 11% from its high of May, but 20% down is considered a bear market. So for those of you who might be concerned that we're in a bear market, we typically don't qualify for that right now because we're down 11% from our high. But the mean recovery time, according to Dalbar Research, for a market correction such as what we're in today, is 107 days. So think of spring. Think of spring coming and things evening out and being a little less volatile by the time spring gets here, March, April. So the message is don't panic, but let's figure out how to survive and thrive. And that's exactly what we're going to be doing over this next hour's presentation. So a little bit of background too on the S&P performance over time. There's an awful lot of different ways and studies out, but they all pretty much equate to the same result, which is a 7% annual return. Warren Buffett here, and I use his metric, which ties with other metrics, but he's saying for basically the last 60 years, if you adjust the S&P for inflation and account for dividends, the average annual return comes out to exactly 7%. And I know, John, on a previous webinar, you had said in the past 10 or 20 years, it's even higher than that.
Slightly. And Sandy, what I was quoting there was the Ibbotson studies, where they were saying that, over the more recent past, we had been experiencing better results, but we're right back down. I'm sure if you averaged out over, like you say, 30 years, 50 years, we're probably still in that about approximately 7% for the risk assets, and then, whatever for the fixed income assets.
Okay. So the point being, it's better than putting your money in cash. Is it better than putting your money in mutual funds? Well, that's up for grabs. There's a number of these mutual funds that are actually underperforming the market big time. I show their logos here, and I'll give you a couple of examples. Now remember, this is in context with the S&P, which is down 5% so far this year and down 11% from its peak. But many of the mutual funds are posting losses of 20% or more, which is really the bear market territory. For instance, PIMCO Earning Markets Fund is down 54% since its May peak. Templeton Foreign down 37%, and they tack on a sales charge of up to 6%. Vanguard International Value Fund is down 34%. Dodge & Cox International down 4%. Dodge & Cox Stock Fund down 24%. So in other words, you get the pictures that you can't really depend on investing your money in mutual funds and be confident that it's going to serve you well. There's also a lot of stocks that we're all familiar with, and I know some people go by the rationale that they should invest in stocks of companies that they know, but I'm not sure that that is the best course that I have taken, certainly. For instance, American Express is down 23% this year. Alibaba is down 18%. Yahoo down 11%. Apple, everyone's favorite stock, down 8% this year. And Yelp. I love Yelp, but I don't want to own their stock because it's down 27% this year. So what we're going to walk through today are how do you find these hidden gems, stocks that you may have never heard of these companies: First Solar, Entergy, Atmos Energy, American Woodmark. Of course, anyone into fashion knows of Michael Kors, but for the most part, the other ones are probably stocks of companies that you're not familiar with. We don't talk about these in our everyday language. So the S&P is flat. Markets down. The S&P was flat in 2015, and the S&P is now down 5%. But the stocks that I'm going to share with you are up. I'm going to start with American Woodmark, which was up 98% last year. It's now down, so you got to know when to sell and get out. First Solar, which was on the logo screen, was up 5% so far this year. And Atmos Energy, for instance, is up 9%. So I'm going to show you how to easily find these and build confidence so that you can go out and follow the same methodology and get these stocks yourself. So another quote from Warren Buffett: investors should be fearful when others are greedy, and greedy when others are fearful. Fear is so much a part of what's driving the markets right now, from everything I read and from knowing a little bit about human psychology. So right now, people are fearful. They're selling. It's creating more selling. It's a domino effect. And this is when, according to Warren Buffett, is the time to be greedy. In other words, buy now when the prices are low. And when everyone is running for the exits, that's the time we want to buy. John, feel free to hop in on these, because you certainly have seen all sorts of markets to know.
Well, and and the great thing about Chaikin's work, both Mr. and Mrs., is that there's it shows you a number of metrics for money flow and so forth with these stocks. So, for instance, the stocks that are just hammered right here, and the fear that he mentions is the byproduct of the same sorts of things that were hitting a little over a year ago when we were talking about Ebola. Well, now it's not Ebola, but it's Zakira, or however you pronounce it, Zakia, or however that's pronounced.
Yeah, I don't know how to pronounce it either.
That mosquito-borne disease that, you look at the cruise lines today, and yeah, they did give slight negative guidance, like I think it was a net 3% lower year over year, or full year rather, outlook. Take into account, and of course they can only estimate, how many people will be not making their decision to be on a cruise line because they don't want to be anywhere near Latin and South America, since that's where the outbreaks of this were the worst. And even though there's, a handful at best of cases in the United States, people that are seeing what's going on with this virus that becomes, I guess, a disease, they're choosing to stay away. And despite the fact that the biggest input for the cruise lines has just been, getting hammered, which is good for them, just as it is good for the airlines, and that is, of course, fossil fuel or crude oil in either Jet A for jets, which is what most of those ships burn. This is the same sort of thing that, like I say, we experienced with the Ebola, and that is, people were afraid to be on a plane with somebody who might have come back from a place in the world where they could have been exposed to that. And you guys all recall how severely the airlines were hit on that. Same thing here is happening. Yep, happening right now today with the cruise lines. Not so much the airlines right now, but that could, trickle over in a different way into the airline stocks as well. So those would be reasons, to really plug in protection if you are in those spaces and you like them for the reasons that I outlined as far as their costs going down. But the risks are that some sort of outbreak is not contained, and people get on planes and cruise ships and all the rest, and people then stay the heck away from those. So with that said, I'm going to toss it back to Sandy about being fearful when others are greedy and vice versa.
Oh, thank you, John. That was a great explanation. And I do remember well Ebola because of 2014, and that's when I bought more of Southwest Air. They were based in Dallas. They are based in Dallas, and of course that's where the Ebola breakout occurred. But all of our work pointed to a very strong potential of Southwest Air stock, despite the fact that there was this dramatic dip in October. So I stayed with it, and I not only stayed with it, but I bought more. That's the type of confidence and conviction that I have that's enabled me to be a fearless investor and to be greedy when others are fearful. And that's what we're going to walk through today. So that my promise to you is that you're about to discover how to defend your portfolio so you can profit in a market sell-off like we are in today. And not only profit, but celebrate. I've always been a big saver. I've put money aside all my life for 401k plan and just kind of stashing it away, but it's also important to celebrate. And so we've used profits from my winnings, particularly Southwest Air took us to Turkey in this top right picture for 2 weeks a year ago summer. And that was strictly from the profits from Southwest Air. Other profits have taken us to Vail, which is on the bottom, and to Italy, which is where we're headed off in the spring. So think about where you want to spend your money, how you want to spend your but before we get into the specific examples, let me just give you a little bit of background on me and why you should listen to me. In the last several years, since I've been investing in stocks since 2012, I've outperformed the S&P 500, and since the Wall Street Journal reports that 4 out of 5 pros over the last several years have underperformed the S&P 500, I thus have beaten 4 out of 5 pros. I found the 2 best growth stocks in 2014. Skyworks was up 156%, and Southwest Air, as John and I have been talking about, was up 126%. I bought that and sold that at the right time. And this past year, I found American Woodmark, which was up 98%. Walker Dunlop was up 64%. Activision was up 94%. I had holdings in all of these stocks. Not anymore, but I did then. And I do this on 15 minutes a day. I work full-time in Chaikin Analytics in the marketing end. And like most of you, I work full-time and can't devote all my day to watching the markets. Although I do always have it on, John, and I do always have CNBC on, and I do always listen to you. And I heard you on halftime today talk about Twitter, which we'll get to. Okay, so John,
Yeah.
Introduction. Everyone knows John from CNBC and elsewhere as co-founder of Option Monster, lead analyst for Inside Options, and of course the CNBC commentator. So let's just start with a little bit of background of how I got invested in stocks. I started out in mutual funds. I never invested in individual stocks until 2012 with Chaikin Analytics. But before that, I didn't have the confidence to invest in single stocks. I thought it was way too complicated. And my 401k plans allowed me to invest in mutual funds. So when I worked at Elizabeth Arden and L'Oreal in New York City, and then the Franklin Mint outside of Philadelphia, I was able to invest my 401k plans in the Fidelity and Legg Mason funds, which were great. Those did really well for quite a while. But then as my career grew and my 401k plan grew, I felt I needed a professional to manage it, since I didn't feel confident that I had the knowledge to know what to do. So at the suggestion of a friend, I hired an advisor. And then, as we all know, along comes 2008 and the whole financial meltdown. And the advisor was not sensitive to my concerns. I kept calling him saying, don't you think we should sell, because everything is pointing down, and it's unlikely that I'm not going to lose more money by holding it. And he said, no, just hold it. Don't sell it. It'll all come back. So I lacked the confidence because I didn't have the knowledge to overrule him and say, well, I just sell it. Just do what I ask you to do. But I didn't have the confidence to do that. So as a consequence, I lost 40% in my portfolio. And this is how I felt after losing 40%. So can any of you relate to this feeling? Have you ever had the same experience either in 2008-09, or is that something you're feeling now? Like, oh my God, I don't know what to do. If you do, just if you would type yes into your question box there. Yes, absolutely. Yep. Joseph, Sabrina, Jerry. Oh, lost 40% too. You bet. Oh yeah, Daniel, Pam. Lots of yeses. So unfortunately, this message is resonating with a lot of you, which I apologize. I'm sorry for that. I'm preaching to the choir. John, I hear you. Okay. Okay. So I think you all understand how this feels. Not a good feeling. We don't want to do this again. When I asked this question at the Option Monster Invest Like a Monster conference out in San Antonio in October, where I was presenting, I said, how would you feel about feeling like this again? You know, do you want to go through this again? And one of the gentlemen said, hell no. So I always think of that now when I ask that question. So no, hell no, I was not going to go through that again. And I resolved to take control of my financial well-being. So let's pause for a second, and just if you'll just chat in what challenges you're facing today. What's holding you back today from pulling the trigger and buying some stocks or trading options or investing in the market at all? If you'll just type in, if you would, what your biggest concerns are. That'll give me a great sense of how to frame the conversation. Knowledge, apprehension, plan, volatility, 2008 crash, don't know about options, uncertainty, poor liquidity, not confident, no knowledge, retirement, volatility, timing. Wow. Okay, this is great because these are the same concerns that I've been hearing for the last month or so when I've been asking the same questions. So in a nutshell, what you all are saying, I really appreciate the feedback, is that there's fear, there's uncertainty, you don't know when to get back in, you're apprehensive, trying to figure it out, you want to protect your capital, and a number of people even have sleepless nights. So during the next, what do we have now, 45 minutes or so, we're going to talk about how to overcome these challenges, because the steps that I'm going to walk you through will get you out of this fear and apprehension, give you a solid footing and a plan. So what we're going to talk about is the Financial Freedom Fast Track, which is powered by Chaikin Analytics. You can see the platform here on desktop and iPad. And this has allowed me to be in control versus in a panic mode. There are basically 5 keys we're going to walk through today, and I'll take you through each step by step with examples, typically from my own portfolio. But the first step is to rely on a proven methodology. And this has to be something you trust, something you have confidence in, a plan you can really believe in. And for me, this is the Chaikin Power Gauge rating. This is a very simple rating, as you can see here, very bullish on a stock's potential. What this rating does is it looks at the potential of a stock 3 to 6 months out and gives it an overall rating, either very bullish to neutral to very bearish. And it looks very simple, but there's an awful lot going on underneath the hood. The rating itself is made up of 4 components. These are the 4 components that it's made up of. And within each of those 4 components, there are 5 factors. So there's a total of 20 factors. Now, how did we get started with this? Well, Mark created this after the whole meltdown. He and I were just getting together after that time. Excuse me a second. He and I were just getting together, and he could see the pain and turmoil that I was going through. And the fact that I was now on my own, I obviously released the relationship with the financial advisor and was now on my own, but I didn't know what to do. So I had opened an account at Vanguard and put the money into an S&P 500 fund until I could figure out what to do with it. And Mark could see that there was literally billions of dollars exiting these typical brokerage firms and going into self-managed accounts like mine at Vanguard, Fidelity, TD Ameritrade. And he said, well, you know, you all are now in control of your money, but you don't have the knowledge or the tools to make good decisions. So he's going to take my 45 years of experience on Wall Street, where I was creating tools for the Wall Street pros. I know what they use when they evaluated a stock, and I'm going to create tools for individuals that you can use, but that are in a format that are simple enough for an individual investor to understand. So that's exactly what he did, and the outcome was the Chaikin Power Gauge rating, which is the centerpiece of all of our tools. And that's why I'm spending the time on it right now, because it's important you understand this. The Power Gauge rating is made up of these 20 factors. They're put into an algorithm, and they were tested for about 2 years before Mark zeroed in from like 200 factors to these 20. But these are the 20 factors that the professionals look at every day when they're evaluating a stock. Needless to say, I don't even know what they mean in many cases, and nor would I know where to find them. So for me to invest in stocks, the only way I can do that is to depend on the Power Gauge rating to guide me, and that's exactly what I do. 3 factors here in red, because those are ones that I feel are quite important. Price to sales ratio looks at the price you would pay for revenue of a company's stock, and many of these high-flying stocks like Yelp, and Twitter are very overvalued, and you'll never get the money out that you put into it. So therefore, I think that particularly today with all this volatility, is really important. Short interest, the short sellers tend to be the smartest guys on Wall Street. John, you can, certainly smartest guys on Wall Street too, but give us your opinion as well on short interest and insider activity, because I feel these are really characteristic of the direction a stock's going to take. The short seller would not short it unless they felt that stock was going to go down. So I don't want them shorting stocks that I'm buying long. Likewise, insiders only buying if they think that stock's going to go up. They may sell for a number of reasons, but we measure inside buying activity. They're only going to buy if they think the stock's going to go up. So, John, happy to have you comment on these 20 factors, and I know you use the Chaikin Power Gauge rating to guide your investment.
Yep, absolutely, I do, Sandy.
Decisions as well.
And thank you. I absolutely do, and this is where sort of the meeting of Chaikin and Option Monster comes into focus, I think, because the money flow gauge is one of the most important to me when I'm looking at the Chaikin gauges. I know it's one of the 4 primaries, but those 20 indicators that go to it are certainly pretty important contributing factors. The money flow, just as you were saying, Sandy, is that is where institutional capital is being committed. And just as you could see today, when there was nearly indiscriminate selling, going back to the cruise line, and they were among the weakest, if not the weakest. I think as a sector, they were down about 12% today. Ouch. One of them, RCL, Royal Caribbean, probably because of that direct exposure to that portion of the world more than Europe, was down about, I think, 17%. But CCL, Carnival Cruise Lines, has a little insulation because they are partly exposed to Mexico and South America where the outbreak is, but then they have a lot in Europe that outbreak, so they were only down about half as much. But to see institutions either fleeing, in other words, hitting the bids, or entering and hitting the buy signal, that is really important to me, and Chaikin shows you both, because I can get the money flow, green when it's flowing in, and I get that same gauge. You're operating the machine, Sandy, so you can probably show them the slides with that. But
yep, I'm showing them ERIE.
When it dives under and you're seeing it go red, it's pretty obvious you got a money flow out, which again in our work is like put buying, and when you got the money flow in, that's like call buying.
And you can see I'm showing them ERIE now, and you can see with the money flow how directly it affects the direction of the price. When there's money coming into it, the price is going up. When there's money coming out of it, institutional money, there's the stock price typically falls, which it does in this area. So that's great, John. Thank you so much. So I have up here ERIE, and I've highlighted the price to sales, which is very bullish on ERIE. This is an insurance stock that I own. So you can drill down. This is a slide from the iPad application, and you can drill down on the power gauge. You get the overall rating, which is very bullish, but you can also drill down on any of those that make up any of the components. Here I'm drilling down on the expert opinions. You can see that the short interest for ERIE is very bullish, which means the short sellers are not shorting the stock, so that's good. And insider activity is neutral, so that's okay. When I'm buying a stock, I like these 3 to be way over on the right in the bullish camp, but neutral is okay too. So a little bit of validation of the power gauge rating. We have all sorts of tests, back tests, and real-time tests on our website, chaikinanalytics.com. So I encourage you to go there if you want more detail. But just in summary, the real-time test going back to 99, well, this is a combination of back testing. But if you look at the last 16 years of a power gauge rating portfolio, if you only invested in stocks that were rated very bullish, your portfolio would be up an average of 20%. Warren Buffett and most other analysts use as an average stock increase per year. So, as I say, go to our website if you want more. But this also is one other validation point in that NASDAQ asked Chaikin to create indexes based on the power gauge rating. So we took their large cap, their small cap, and their dividend achiever indexes, overlaid the power gauge rating to filter out anything that was neutral or bearish, and then that was locked for a year. And then you can see here the results, and it's coming up on a 2-year anniversary in April. But you can see that we've outperformed the Chaikin NASDAQ index has outperformed the NASDAQ one by a very large margin. Based on that, First Trust came to us, and they asked us to create unit investments trusts, which are portfolios of stocks. And that, again, is a set investment of 20 companies from the S&P 500 that meet certain criteria. Those 20 stocks are put into a basket. They're called the First Trust Chaikin Low Beta Growth Unit Investment Trust. This is the first time money managers can invest funds for their clients in a portfolio of stocks based on the power gauge rating. So we're very excited about that. We've just launched that. All this is to say that we feel that the power gauge works, it's reliable, and it's proven successful. So let's look at a stock that happened today, Coors. Coors happens to be in one of the 20 stocks in the First Trust portfolio. And you can see here it was up 22% today, and this is in a day where the Dow was down by, what, 300 points? So it was kind of a bloodbath on Wall Street, but why is Coors up 22%? Well, they reported earnings, actually blowout earnings, and that Wall Street didn't expect, and the stock jumped up over 23% today. This is where I put this arrow here because this is where we triggered a buy signal. Chaikin has 6 pairs of buy-sell signals, which I'm going to get into on step 5. But just note them as we go along. These little green triangles are obviously the buy signals, and the red triangle. But you can see that the power gauge rating on Coors has been bullish since early November. Relative strength here has not been strong, and money flow has been almost neutral. But the power gauge rating since November has been very bullish. And you can see there were some buy signals that came along the way, and if that was a stock on your watch list that you were following, you could have taken advantage of this before earnings. I love to take advantage of stocks like this and buy them right before they report earnings when there's a strong likelihood of them outperforming their earnings estimates. Mark is giving a webinar on that exact subject on the 11th, next Thursday. So be sure to mark your calendars as registrants of this webinar to that one as well. But get familiar now with Chaikin and see how you can take advantage of earnings plays like this. And I'll be going over additional earnings examples in the presentation to follow. So power gauge is seen on most of really all of the financial media. Mark is quoted almost every week by Evelyn Chung of CNBC.com. Mike wrote up a fantastic review of Chaikin Analytics in this week's Barron. So if you haven't seen it and you get Barron's, go to his technical investor column and read it. It's a fabulous overview of what Chaikin Analytics can do for you. So I think I'm going to move on to step 2. Are you all with me? Are you all understanding the power gauge rating and how important it is? It is the centerpiece of what we're going to be talking about for the rest of the. Just want to make sure you're all with me and that I'm clear and you're following me. So if you can just, if you would, type yes into your chat box, that would be great. No, you don't see sell signals yet. You will, but they weren't on that example. Lots of yeses. Wow, you guys get it. Awesome. Okay, fabulous. So let's move on to step 2. Thank you. Step 2 is to play offense. Well, what do we mean by a classic bull? And this is what John was talking about. These are the indicators that are on the Chaikin charts on Chaikin Analytics that give you a really clear picture in green and red displays of what's going on with the stock. So our example is for solar. And a classic bull, in our opinion, has to be having a power gauge that's bullish, green right down here. You obviously want the price to be trending up, not down. Chaikin money flow, which John says he relies on religiously, and so do I, shows you the institutional money coming in and out of a stock. And that's really important because that is what drives the price of a stock. It's not you and me trading. It's these big institutions that are trading in huge blocks. And you want the relative performance to be strong. And that means relative to what? Well, relative to the S&P. And that's this line over here that's obviously green in the case of First Solar. If you're going to invest in stocks or want to know the direction of a stock, you want to know that that stock is outperforming the S&P 500. If it's just an average stock, like those 6% ones in the tests, you might as well just put your money in an S&P 500. But if you want to outperform, if you want to the winners, like the First Solars, like the Atmos Energies, like what I'm going to be showing you in the next couple of minutes, then you want to follow this methodology. Now, I found this interesting because our behavior doesn't really change over time. This is a Wyckoff chart showing the way a stock moves when it's going up. And when I first looked at this, I thought, this is pretty confusing. Not. And as we all know, a stock doesn't go straight up or straight down. I call it zigzagging. I mean, it zigzags across sideways for a while, then it zigzags up, it pulls back a little bit, goes up a little bit more, goes sideways. And this is actually, if you look at a stock chart, this is actually the way a price moves. I mean, let's look at First Solar a little more carefully here, and you can see sideways goes up, goes sideways up, sideways up. So that you want to be very aware of when you're buying a stock, so that you're not buying it up at the top, you're buying it down here at what they call a dip or a pullback. So let's evaluate this, and I'm going to walk you through using this as an example of how I stock. I first bought this stock back in August at this yellow arrow here when the stock was 52. It went all the way up to 72, and then it pulled back. And to look at the pullbacks, look at this overbought, oversold indicator here, because this really helps guide me on timing, when to enter and exit a stock. When it's up here, it tends to be and when it's down here, it's in that dip. It's in that zigzagging down. So you want to buy it when this is dipping down, and you want to sell it when it's up at the top. And this has really helped guide me with making timing decisions. So in other words, I didn't buy this up at 72, and the oversold indicator was up high. That's not a good time to buy it. I knew it was going to pull back because of that Wyckoff chart. They always do to some degree. Maybe not always as much as we like, but they always do. So I waited for it to pull back, and lo and behold, it triggered an oversold buy signal on it, and I bought more at 59. Now this was just a couple of weeks ago. This was January 15th, so this was exactly 2 weeks ago. I bought this at 59, and it's now it's up 69 today in category. Pulled back today, but that's okay. I mean, Goldman's come out with a target of 100 on this stock. Barclays just raised the target from 71 to 90. But look at the green here. It's had a solid power gauge rating since October. The relative strength compared to the S&P 500 has been very strong since October, and there's strong money flow coming in. This is the institutional money. This is the indicator that Mark basically made his reputation on Wall Street with, and it's on every technical analysis package worldwide. So this measures the institutional money coming in and out of a stock. And why is this important? Well, what I said earlier is that the institutions move the markets. They buy in such big blocks that they affect the supply and demand. Supply and demand affects the price. So everything's green here. This stock pulled back 5% today. I think it closed at like 65. And I would see that as an opportunity to buy more. That's the way I think. Why? Because everything's green. Everything is green on this chart. So I have full conviction that this is a solid stock and that I can feel comfortable buying more of it, or at least not selling what I have, not panicking. I mean, some people, when they see a stock go down 5%, oh my God, I've got to sell this. Well, no, this gives you the guidance to say, not a bet on that. Hold on. So let's look at another example. This is American Woodmark. American Woodmark was one of the top growth stocks last year, 2015, and I bought it back here in April. And I bought it at again on an oversold buy signal at 54. I had it on a watch list. I keep two lists, by the way. I keep a list of my stocks that I own, which typically are like 8 to 10 stocks, and then I keep a watch list of stocks that I'm looking at. And I flip through those. Those are maybe 20 or 30 stocks, and I flip through these two lists every day to see what's going on with the stocks that I either own or the stocks that I'm watching. And this is what I do in 15 minutes a day. I do it in the morning and again at night. And that's literally, how I monitor my portfolio, and I'm able to defend it and make good investment decisions of whether I need to make a change buying or selling. So back to American Woodmark. I had this on my watch list, got the buy signal, I bought it. It went sideways, but everything stayed green except for a little money flow going out, and it's typical to have a little money flow going out. That's nothing to panic about. That's fine. So it, it zigged and zagged. It went up a little bit, and then they reported their earnings. And I love to, as I said earlier, I love to sell a stock, buy a stock right before they report earnings, or if I already own it, to sell it after they report earnings. Because if they exceed the expectations, they tend to pop up, and they can go up 10 to 20%. I mean, you saw that with Michael Kors today. They're up 23%, doing the exact same thing. So here it popped up 10%. I said, well, I'm going to use this as an opportunity to sell this. I sold this at 72. So I made a nice 25% profit, which for me was about $4,000 on a 3-month trade. So that was good. But, I really like this stock. And things continued to stay green. I thought, well, maybe I shouldn't have sold that. But I thought, okay, I'll put it back on my watch list. And I bought it back again. I bought it back a little bit higher. Bought it at 59. But that was okay, because again, I bought it with an oversold buy signal, and I knew they were reporting earnings. Our platform makes that very easy to know when a company you own or are watching is reporting earnings. So I knew they were reporting earnings around the corner, and I bought it, and lo and behold, they did report a great earnings. And I had the confidence in buying it then because everything is green power gauge, strong relative strength, strong money flow. And in fact, it did pop up. And it popped up about 20%. So then I sold it up here. So that's how you can profit, particularly during earnings season, and profit on stocks that nobody's ever heard of. So I don't buy the Apples and the American Expresses and the Walmarts. These are the type of stocks that I like to find. And with this platform, I'm going to show you how you can find them too. And this is how I invest and find these little hidden gems. I call them golden nuggets, and we just adopted a kitty from the SPCA, and her name is Nugget. So I like that word too. So nugget is a good word. So you can find these golden nuggets doing this. Would I want to own this stock now? No. I added this red line here to show you when things changed. And you can see in this case, and in many cases with stocks, they go through what we call a personality change, when all of the green turns to red or neutral, which is exactly what's happened here. Come January, power gauge went neutral, then started, relative strength started to go neutral and negative, and then there's a big chunk of money coming out of this stock. So I was not tempted to buy this stock. You know, it's now gone down 10%, 14%, excuse me, year to date. That's in 1 month after being a really solid stock last year. So this is how you know when to get in a stock, and equally as important, getting out of the stock. So we do get a lot of testimonials, and this is one of our subscribers who just wrote us a couple of weeks ago. Joe does these coaching classes for our subscribers, and when you first subscribe, he gets you immediately into a coaching class so that you can become familiar with Chaikin analytics and learn your way around it, and how you can integrate it into your trading style. But this fellow said, you guys are the best at what you do and my #1 go-to source for daily advisory information. And of course, the analytics platform is simply amazing, best of breed, and getting better by right and left. Recently, we added a screener, which I'm going to show you, and we added an options capability, which really complements the ideas that John and Pete give you every day. So we work very closely with Option Monster to integrate Chaikin with options research to give you the edge. So let's move on here. Okay, are you all clear with the bulls? Did that make sense? Did you understand why it's important to have those strong factors or technical indicators rather, like money flow and relative strength be strong when you're buying a stock, and how easy it is to identify when that stock starts to turn against you? So Luis, just to fill me in a little bit more on that, what the concern is. I don't understand your question. Options activity. Okay, yeah, options activity. There's so much to options activity, and you obviously have an expert on with John. I am going to hold options questions till the end, but Joe does give options workshops every Tuesday and every Thursday at 11 a.m. Eastern Time for our subscribers, and he'll walk you through how to use our options play activity. Okay, great. So I think you're all good on this. The red line on the chart, that perpendicular red line, sorry, I added that just to show you when the personality change took place. So back on American Woodmark. So sorry if that confused you, but just hop back there. This I added. Okay, this isn't on the chart. That's just saying that's when things went against you, and if I had owned that stock and wasn't out by then, I would have been out there at around 75. Okay, let's go on to classic bears. Well, they're obviously the opposite. I'm using Twitter here because, John, I listened to you today on halftime, and you were talking about Twitter and about how if they had bought Instagram, that could have saved it. But I think you were talking in reference to Stifel's downgrade.
Yes, I was, Sandy, and I was, just as you do, I interact with a lot of people on Twitter, and I was pointing out to some people that it was unfortunate for Twitter that in their young life they didn't seize the opportunities, either Instagram, which they could have easily done, that would have put them squarely direct competitor with Facebook, because Facebook is, after all, in your life, and an awful lot of those things are pictures. And Instagram was the perfect way for Twitter to do that. It was $1 billion. Everybody thought Facebook overpaid for it, and then they paid whatever, $16 billion for WhatsApp, and that was obviously a much bigger reach. That was one that Facebook did that to keep it away from Google, not away from Twitter. But had Twitter reached for Instagram, I believe that their market cap would be triple or higher what it is right now. And it was just an example of they just wanted to stick with their knitting. They didn't want to change anything about her. And that was a big mistake because it's all about growth, which obviously either of those two companies would have given them growth. And it's also about then ultimately monetization. As long as you're growing, they don't ask the questions about monetization. As soon as you stop growing, which Twitter has stopped growing from a user standpoint, they're having a hard time attracting new users and so forth. Obviously, either WhatsApp or Instagram would have been vital for them. And,
Yeah.
you know, so anyway, back to your bear markets. Yeah, that Twitter's definitely been in a bear market. Yesterday when we had some discussion back and forth about where they are, we talked about, hey, you know, it popped today on the idea that Andreessen and perhaps Silver Lake had looked at them. That was the rumor. Well, when they came out and said not only did they not look at them, but they had no interest, obviously that wasn't what Twitter owners needed to hear, and it tanked. And more or less, we said that yesterday on the halftime show. We said, look, if they don't come out and confirm that they're in this thing, it'll easily be down as much as it's up today, because this is the only reason it's up. It's not anything new about the company, strictly what's happened here with this particular rumor. Anyway, bearish sign you have, Sandy.
Okay, that's great insight. Thank you, John. So what John was saying is it tanked big time today, and you can see here it's down. When I took this slide at late afternoon while I was listening to John, it's down 10%, down to 16. Okay, so let's look. How would you have known to get out of this stock? All right, power gauge. Neutral, it turned bearish here in late April at around 35. Stock is now 16. At the same time, relative strength went from positive to negative. And look at this huge money flow coming out of this stock. So that's all correlates to the downward trend. The stock is obviously trending down, and you're getting these red triangles along the way. Now, these are money flow sell signals saying money is institutional money is coming out of this stock. Sell. A total of 6 pairs. So there are other like relative strength sell signals that trigger as well. Today, overbought sell signal triggered. So if you weren't already out from these other signals that you were getting, you should have been out before it dropped to 10% on today's action. But that's how you read these stocks, and this is part of defending your portfolio. Because today, as everyone knows, there's so much volatility, that there's these wild swings. This gives you the stability both on the upside and the downside. I mean, these are great stocks going down. If you're confident, as this chart is displaying, confident this stock is going to continue to go down, you know, this could be a great candidate for a short sale or options. So the Wyckoff chart is the same concept, only obviously it's going down instead of up, but it still goes sideways, breaks down, goes up a little bit more, falls down again, goes sideways. So again, you know, stock prices don't go in a straight line. You know, they zigzag all the way up and down, and you know, it's important to recognize that. And this overbought, oversold signal can help you with that. So, John, I'm moving on to Netflix now. Netflix was was actually the #1 stock on Motley Fool's top 10 stocks of 2015. It was up 135% last year. So it's part of the FANG, you know, what was it, Facebook and Amazon and Netflix and Google. It's not your favorite anymore. It shouldn't be your favorite anymore because things have really changed come fall, really. So let's analyze this chart. So the power gauge rating has not for the last year been bullish, even though it did go through that tremendous growth. there were underlying factors that kept the rating from going bullish. So it was neutral, but it turned bearish in September. And it turned bearish in September when it was about, looks like around 120. So if you own this stock, when you got that bearish alert, and we tell you when stocks that you're watching or own turn a different power gauge rating, that would have given you a good sign to, hey, you know, this might be a good time to get out. Money flow also turned negative at about that time. Relative strength, however, did stay positive until early February. But the stock is now at 92, which is down 40% from its peak of 133, and that was only on December 7th. So since the 7th, December 7th, which is what, 6 weeks ago, that stock has lost 40% of its value. And the power gauge rating, though, has been saying since late August or early September, you know, you better get out of the stock. And that is about when it was about 120 up here. It's now 92. So wouldn't you have liked to have gotten out of the stock at 120 instead of still holding it in your portfolio today at 92? Now, oddly enough, Piper Jaffray upgraded the stock today to a target of $122. And boy, I don't see it on this chart. I mean, all of our work is saying avoid this stock like the plague, unless you want to bet on it on the downside. But you know, this is why it's good to have this independent research like Chaikin, because there's no emotion in this, and nobody has an opinion in this. This is unbiased research with no personal, you know, one way or other, whether the stock is going to go up or down. So this stock reported just a few weeks ago, January 19th, after the close, and it was 108 after the close, and it dropped another 15%. So, you know, clearly this is not a stock I would ever want to buy on the long side, but Mark did feature it in a report that we call Market Insights. He puts a weekly report out every Sunday night for our subscribers, and he always features highlights one or two stocks in particular along with other stock ideas. But he said about Netflix on January 17th, a couple of days before they reported, put options on stocks like Amazon and Netflix are attractive. So, and that's where that arrow is. So, John, if you have anything to add on Netflix, you know, welcome your comments on this, because I know this is a very popular, talked about stock.
I don't have a lot really to add, Sandy.
Okay.
I'm more interested in it down here. I missed being long other than just for days at a time last year. I didn't hold it for weeks and months or anything else, but obviously, just as your gauges were, you know, shouting, the folks that overstayed their welcome, a 40-some-odd% sell-off in basically a month and a half, you know, not even a full 2 months yet, is pretty disastrous. And you know, at some point, certainly replacing your stock investment with a call or a call spread would have been a prudent thing to do there, where you can define the amount of risk you've got on the table. But unfortunately, you know, far too few people really make use of the product the way they should. Most people's first thing that they figure about options is they should sell them. And that works until it doesn't. For instance, if you were somebody who, when the stock was over 130, said, I'm going to sell a way out of the money put, I'm going to sell the 110 puts. Well, now those puts are, you know, $18 in the money. Depending on your time frame, you know, if you gave it 30 days or 60 days or however many. The good thing about the options that are as active as Netflix is that you do have weekly options. So if you are somebody who's, you know, a real risk taker like that, there are certainly ways that you could use the Chaikin positive and negative, or in other words, bullish and bearish money flows, and position yourself with weekly options, even if you're not a buyer. even if you are somebody who always wants to be a seller, because you're giving somebody a lot less time for them to be right. And you can basically say, boy, I've got a neutral on this stock. I'm pretty comfortable selling out of the money calls and out of the money puts in the short term, but I don't think I want to be out there 1 and 2 months in the future because things can change.
Awesome. And if you don't have John looking over your shoulder suggesting what you do, you can use our options play overlay, which would overlay onto this Netflix and give you options of options. So it would give you different strike prices and choices that you could make either on the upside or the downside. So let's look at another problem stock, Amazon. Okay, Amazon was number 2 on Motley Fool's top 10 stocks of 2015. It was up 118% last year, but again, not looking so great in the new year. It's down 15% year to date. Now look at now I've added this red line, and I've added this, John, for your edification. The power gauge turned bearish early January, around January 11th at 619, and the stock's now 10% lower. It's at 554. Relative strength stayed positive for the most part, but money flow was negative. So you had a negative power gauge rating and a negative money flow. That in itself gives me pause when it's happening in a stock that I own, and that is a signal to me to say, hey, you really should think about getting out of this stock. So that if you were using this methodology, you would have been out of this if you had held this on the long side at 619. It's now 554, I think, is where it closed. Now they reported recently, just January 28th, which was just a few days ago. And again, this was also featured in Market Insights, the same as Netflix, where Mark said put options on stocks like Amazon and Netflix are attractive. But this is where Chaikin can help you identify what's about to happen or likely to happen and give you the warning to get out of this before a stock implodes. Now, what's happened here is we also triggered a sell signal on this right before the stock reported earnings. So you're going into earnings with a sell signal, negative money flow, and a power gauge rating that's bearish. It's like, I mean, if I had owned this stock, and I never have, but if I did, I would say I'm out of here before they report, because the chances are this is going to disappoint, and that's exactly what it did. It disappointed. And this was the comment that Mark had made in his Market Insights report. So that's how Chaikin can get you out of these stocks before they implode. You can see here, this is from the screen, the night they reported that in the aftermarket it was down 11% at that time, and it just kept going down the next day. So we get a lot of testimonials. Rex here followed an Amazon trade we had made earlier in the year, and his profit covered his next year's total cost of 2 months in Hawaii, which is pretty amazing. I mean, I thought I was doing well with funding 2 weeks in Turkey, but I'm glad that Rex made a lot more money than I did and went to Hawaii for 2 weeks with his wife. When do I sell? Okay, I see also that it's like 5 o'clock Eastern time. So we're at our hour. I am happy to continue. Is it okay if we keep going? If you all can just say okay in your question box, if it's okay that we just keep going through the material. Okay. Wow. Thank you. That's great, John. We're getting a ton of yeses and okays. So
good.
I will keep working.
Sandy.
Yes.
I unfortunately can't stick with you because I've got a meeting with a friend of, well, certainly somebody you guys all recognize, Kenny Polcari,
Okay.
down here at the New York Stock Exchange. So a meeting I got to walk into with he and the governor of the stock exchange. But I'd say, folks, what Sandy touched on, again, the Amazon example is another great one. Let's say you didn't have any option position at all, but you've got, basically the 3 negatives that she spoke about Amazon. not only could keep you from, putting on a bad position and or get you out of a position if you were in one, but it can also be a pretty nice lead for you to put on an option position that's basically, moved the odds pretty far into your favor, because we all know earnings are the time when stocks are the most sensitive, when they have a quarterly earnings report, not only because of that news, but because of the guidance that Larry Fink doesn't like that they offer. Because they could offer weak guidance, they could also offer strong guidance. But in either case, and very few times do they offer like outrageously strong guidance unless they're Elon Musk, and he doesn't often meet the strong guidance that he offers. But nonetheless, if you're somebody who, like me, wants to be a player around earnings, certainly any kind of put spread that you could have established would have probably paid for a couple trips to Hawaii a couple times a year in the case of Amazon. I mean, look at how big that move was, not just in dollar terms, but in, how many strike prices did those puts go through to the downside. And usually you can get on a put spread, an out-of-the-money put spread, for instance, and just real quick, if I could, Sandy.
Absolutely.
If you're looking at options, folks, and you look at the straddle, so let's say that Amazon was approximately 600, 610 or whatever. Look at the at-the-money straddle, call and put. Look at what the total value of that is, and then divide that total. Let's say it was, for instance, $30 by the stock price, 600. And then that's telling you how much they think it's going to move up or down based on, the risk players that are in the market putting their money where their mouth is at that time. I love seeing that, and then saying, for instance, Sandy, if that straddle was $30, for instance, let me buy a $30 out of the money put and sell a $35 or a $40 out of the money put against it. So now I've got a directional bet, but I've probably got it very cheap. And because I'm selling a put for every put that I buy, the impact of me being wrong or of volatility coming in isn't going to destroy me. And meanwhile, as I say, this thing went through like 6 strikes to the downside. You would have, made a fortune on whether it was a $5 or a $10 spread. You would have paid very little for it, and you would have had an incredible move to the downside that really rewarded you for, using Chaikin the way you should. So with that said, Sandy, I'm going to toss it back over to you and say thanks again for all this great insight.
Thank you, John. Your insight and your perspective is so rich and invaluable that we really value our friendship with you. And thank you so much for all of the input you gave us tonight.
Likewise. Thank you.
Okay. Take care. Okay. So let's look at when I sell. I don't wait till a stock gets to a bearish. Those examples weren't from my own portfolio because I don't own bearish stocks. But if the power gauge turns neutral and another indicator like money flow turns negative, then I start looking at it very carefully as a sell. Certainly when I get a sell signal, the price drops below this proprietary long-term trend line, which I haven't really highlighted, but I will on the next chart, and a stop loss. Now, I don't put in like automatic stop losses. I mean, remember what happened on August 24th when the Dow fluctuated 1,000 points intraday, and all that, it just kept triggering other stop losses, and it just was domino effect. So I'm not a fan of them automating the stop loss, but I do have in my mind, and since I only own at any given time, it's pretty easy to keep track of. So I have a sense of where I bought a stock, and it gets to a 10% below that value, I start considering selling it. So let's look at everyone's favorite stock, Apple. This is the most popular stock held not only by individuals but by institutions in 2015. And interestingly enough, they said today on CNBC that Google has now surpassed Apple as the most valuable company in the world. So Apple now takes second position to Google. It was down 3% last year. Year to date, it's down 8%. We've been talking about this all year because everyone always wants to know about Apple. I added this line here, this red line, to show what we call the personality change. This is when things turn from positive to negative. It was neutral, but the relative strength turned negative, and you get a sell signal. So these were indications that all was not right with Apple, and this was at 124, when Apple was 124 up here when this sell signal triggered. The stock is now 94. It's down 24. You could have saved yourself all that pain, 24% of value, heeding what you're looking at right here. And if you didn't do it then, you would have gotten other sell signals to say, hey, you know, you can still get out. Now, what I referred to earlier of this long-term proprietary trend line, that is this orange line here. And that's a Chaikin proprietary trend line. And what this means is if that stock price crosses underneath it, that's also a time to say, hey, you know, things might be going south. Good time to sell. That was at like 130. You know, likewise, when it goes above it, as it did down here, if you still held it back in November and it went up above that trend line, that's a good time to think about taking your profit. And then, as you can see, it quickly fell back down again. So that would have been a great opportunity to take a profit in here, and you had this sell signal to give you confirmation. You could have been out at 120 or so. Again, it's down to 95. So these are the things that I look out for in the stocks that I own. Now I'm going to use this KMI, Kinder Morgan. Everyone knows that the oil and gas has been in their own bear market for the last year and a half. Particularly had a horrible year in 2015, down 63%. And I bring this as the example because Mark and I were in San Antonio with the Option Monster team, and they had invited me to present at their Invest Like a Monster conference. So I presented, and then we had a booth there, and we had a number of the attendees, most of the attendees came over to the booth at some point of the conference to see what Chaikin was all about. So this one man was talking to Mark about Chaikin, and I have this red arrow here because this is when we were in San Antonio, and this is when it was October 9th, actually. And Kinder Morgan was at 33 right here. And Mark pulled up Kinder Morgan. I think the gentleman asked, he said, would you look up Kinder Morgan? And we pulled up the chart. Oh, gosh, everything's red. Okay, does everyone see on this chart that as of June, where I added this red line, this is where everything turned south. Actually, it was a little bit earlier than that. It was, it was early June, everything was negative. Is that clear to you? I mean, your eyes hopefully are now getting used to reading these charts, and you can read the colors now hopefully instantly like I can. But just put yes if it's clear to you that June was when the personality change happened. Great, lots of yeses, awesome, fabulous. Okay, cool. You guys are on it. So that would have been, if you had owned this, you would have sold this stock back up here around, what, 38 or so. But let's call him Larry. I can't remember the gentleman's name. But Larry said, I own this stock. And Mark said, well, gee, you know, in our system, our work is showing power gauge negative relative strength, negative money flow, and lo and behold, here's a sell signal. I mean, wouldn't you want to consider getting out now at 33? And he said, no, I've researched this stock very carefully. They have a really high dividend. It's 13%. You know, I've held it down. You know, I bought it much higher, and I held it all the way down. And I know they're not going to cut their dividend. Mark said, well, you know, if the stock is down substantially from its high, what would you do if they cut their dividend? He said, oh, they're not going to cut their dividend. No way. I've researched this stock very carefully. And Mark, to his credit, said, well, then, Larry, you know, this is not the right system for you. Because if you don't have the confidence and the conviction to trust it and rely on it, then you're going to override what it says, and you're not going to get any value out of it. So this system is so objective, and this is the beauty of it, in my opinion. It takes the subjectivity out of the equation. So rather than be like Larry saying, "Oh, I know this stock is good," this is only going to work for you if you can look at this chart like you all just did and say, "Yeah, this had a personality change. I would have liked to have gotten out up in the high 30s." And that's the key to the success. If you're going to think that you're smarter than the model, this is not going to work. But if you're willing to embrace the model and use it as a guideline along with the other indicators here and the sell signals, then it can save you a lot of pain. And it just triggered another sell signal. So if someone said to you, "Well, gee, it's rallied from like, what was that, 7 or 8 up to 15, I better get in. This stock is on its way up." You could look at this and say, "No way. Bearish power gauge, bearish relative strength." And for the most part, money's been coming out of this stock since June, and there's a sell signal. So this is where it can validate someone else's research or recommendation to you. Okay, let's move on. That's great. So those points are really important now, obviously, with so much volatility and downside risk. That's the way you protect your portfolio, is by using those bearish signals and indicators to warn you to get out. So another one of our points, step 4, is to use industry groups to help guide you. Now, research has shown that buying even average stocks in strong industry groups will outperform very strong stocks in weak industry groups. So why not put the wind at your back, as we say, and go with strong industry group stocks, which right now, for the last several months, have been in the utility and water supply, publishing, investment funds, insurance, utilities. People are looking for cover right now, and that typically is in these utility stocks. So that's not unsurprising to see that they are the lead industry groups. And by lead, I mean they have the most percent of power gauge rated stocks that are rated bullish versus bearish. So you can go into our list source. You can also go into what we call hot lists, and we have curated lists. Featured bulls and bears is a really good list to go in. If I clicked onto this, I'd go into featured bulls. This would show me the classic bulls, and that would also be a good list to research and use as well. But here's the easiest thing to do, is to use our new stock screener. And we just added this at no extra cost in November. But the beauty of the stock screener is you can put in your criteria and screen for exactly that criteria. So here's what I did. I took the stock universe, the Russell 3000. I said, just show me the strong industry groups, which immediately limited the universe of stocks to 335 stocks. Then I said, I only want stocks that have a bullish power gauge. And these are those 3 factors. Remember that I said the 3 out of the 20 that I feel are particularly important, so I want those to be strong. And you can see I went from 54 down to 6. And then I said I also want money flow to be strong, and I want relative strength to be strong. So, this is what we've been talking about on these charts. This is the ideal setup. So I took a universe of 3,000 stocks, and literally in seconds, I come to 5 stocks. And then this is in my workstation, in my platform, and then I can flip through these stocks and look at candidates to buy. So ATO, Atmos Energy, actually has been on this screener list since I started doing this in late December. Its stock is now up 9% this year. I mean, look at this chart. Fantastic. Plus, you got these buy signals here. Unfortunately, I was fully invested and I couldn't react to it. But if I had had cash on the sidelines, I would have bought this stock here with this buy signal. remember the S&P 500, the benchmark is down 5% this year, year to date. Entergy is another one, up 5% year to date. You know, same scenario. And NJ Resources is also up 7%. The other two stocks are up 4% this year. But you can see how that valuable that screener is, as did this subscriber who says that Chaikin's absolutely incredible. It was started great, but with the options and the screener edition, it's absolutely the best on the market. So that screener is, due to time, I can't spend more time on that than I just did, but you can see literally in 5 seconds I could create that screener and scan for it and get a list of 5 stocks as candidates. So it really narrows the field and allows you to zero in on what you feel is important and invest that way. So let's go to our last key to success right now, which is to use the signals. And I'm not really going to spend more time on these signals because we've gone through them. I've been pointing them out on the charts, both the buys and the sells as we've gone along. But how do you find them? Well, you can overlay what we call this alert view, which is a little bell, onto any list. So I told you earlier that I keep a watch list of stocks. And for a webinar I did last week, I overlaid the alerts view to say, okay, these are the stocks I'm watching. What's the activity? Have any triggered today a buy signal? And lo and behold, here's Atmos, the one we just looked at, that's up 9% this year. And you can see that 2 buy signals, money flow buy and relative strength buy, were triggered on the 25th when the stock was 64, and it closed tonight at 70. That I made that chart earlier in the morning, but the stock closed at 70. So on a down day, this stock is up 2% today, you know, on a day that the market is really having trouble and struggling. So that's how powerful these tools can be, and that's how you can really zero in if you follow these 5 keys to success. Methodology is the power gauge rating. Let's just review a second. Playing offense is defining those classic bulls. Playing defense, particularly now, is to identify those classic bears before they implode your portfolio. Use industry group strength to put the wind at your back, and use the buy-sell signals to help you identify when to enter and when to exit a trade. So what I like to do, and this is up to the audience, is I like to use the Southwest example to wrap up all of those 5 keys and show you how I used all 5 keys to come to the buy and sell decisions that I did on Southwest Air, which was one of the 2 highest growth stocks of 2014. But we are over our time. So if you'd like me to continue, just say yes or continue. You know, if you want to get to the Q&A, that's fine too. Just say Q&A. Onward. Yes, yes, yes. Continue. Yes, please. Okay. Wow. You guys are fantastic. I love you. Continue. I will. Okay. Fantastic. All right. So let's look at Southwest Air because this is a really interesting case study. So go back to June. Here's June of 2014. The Transportation Air Industry Group was one of the strongest groups at that time. So I went in there. I was shopping for stocks, and I like to shop, so this is kind of fun for me. So I was shopping for stocks. I went into this. This was the 3rd strongest industry group, and I flipped through the stocks in that group, and this caught my eye because everything's green. So I put it on a watch list. You know, and then I bought it. I waited for that pullback. Remember, you want to buy down here on this downward dip, not up here. And they always do dip back at some point. So I waited for that dip, and I bought it here at 25. So this is more of 2014. This is going into the fall of 2014. You can see there were these nice buy signals here. So I said, man, this stock is really hot. I'm going to double my position. And as I have no qualms about paying more for a second position if I feel that it's really got strong potential, which is what I did. So I bought more here at 33 with this oversold or maybe it was, no, I guess it was a momentum breakout signal triggered here, and I bought more. Again, because everything was green, right? And then remember in the beginning of the presentation, John referred to the Ebola crisis in the fall of 2014. This is it. This is it. Everyone panicked, including the pros, and they all sold everything. That's why you see money coming out of here. But notice that the power gauge, with the exception of a few days, stayed bullish. Relative strength stayed strong. Money was coming out of every stock because of these automated trading systems that required them to sell. And people were panicked. And guess where Southwest is headquartered? In Dallas, where the first patient with Ebola was diagnosed. So I remember it very clearly. People were really panicked. They were afraid that we didn't know how to contain this. And everyone was selling. But I'm looking at this chart thinking, boy, things are looking good for Southwest. There's not a thing wrong with this stock. So once it hit the bottom and started coming back up again, I bought more. I bought it at 28. And ironically, while I'm buying this stock, Mark had met with a hedge fund outside Philadelphia, and they said, "Oh yeah, we owned Southwest, but we sold it on October 15th at 28." So the hedge fund, the pros, are selling this stock at 28 on its way to 45. I'm buying it at 28 on its way to 45. I mean, which side do you want to be on? But you can see how easy it is when you look at this, that you have the conviction to stick with your methodology and hold on to it. But then look what happens here. It kind of levels out and started to go sideways. So now we're going into 2015. This is spring. Sideways, 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 and then look what happens. Things start to fall apart here. We go through, remember what I called it before, that personality change, where the relative strength turned negative, money flow had already been negative for a couple of weeks, neutral power gauge rating, and a sell signal here. But before there, I said, boy, this, I've got such a big position in this stock, I'm going to sell some at 45. So I sold half my position here at 45, and then it kind of went sideways again. Relative strength turned against me, and I got this sell signal, this relative strength sell signal. So I said, boom, I'm out of here. And I sold the balance at 43. I mean, the stock now is at 30, close tonight at 38. So, that's a far cry from when I sold it at 45 and 43. So that's how you use those 5 keys to make your decisions, not only to when to get in or when to buy more or when to sell. And that's how powerful this is. So by now, I hope I've met my promise to you and that you've now discovered how to defend your portfolio and how you can profit in this market sell-off. And start realizing your dreams. Put some money aside for your retirement, but also think about how you want to spend your profits and celebrate. We get, as I say, a lot of testimonials. I always love the ones about confidence because I'm such a big believer, having lacked confidence for so long, up until 2012, that anything I can do for investors to improve their confidence and give them more confidence, I think that's just the root of profitable investing. Because if you don't have confidence in yourself, you're not going to make good decisions, or you may not even invest at all. But Robert, who was a new subscriber in December, said, thanks for giving me the confidence I never had. This is like the best thing I could ever hear that we can do for people. And he sometimes wonders how people could miss a tool this accurate, and how is it that you give this out for free? Free because the $1,900 subscription fee is nothing compared to the ROI you get using this tool. Another one of our subscribers said in the 5 business days that he's been using, he's paid for the subscription over 10-fold. These initial results are nothing short of astounding. And a portfolio manager who uses Chaikin said in the first 2 days using Chaikin, he more than paid for his annual subscription. And in the second week, he made over $15,000 on 3 earnings plays. Remember again, Mark is giving a webinar. It's a free webinar to subscribers and non-subscribers on February 11th on how to profit during earnings season. It's really, I mean, you can really profit. So I encourage you all to register for that as well. He likes the combination of the several indicators. That's what John was talking about, the money flow, the relative strength, the power gauge on one page, and the clear, easy to follow signals it gives. Those are the buy-sell triangles. He's highly recommending this to other investors who want to save time and improve their returns, and who has enough time in their life to do everything you can and want to do. Not many people. So I hope on my next webinar I'm going to be stating your success story, because we would love to have you be a success as well. So we want you to get on board with the Chaikin Analytics, and we call this the Financial Freedom Fast Track. Here is the options play, and this is the options capability that's been added that we don't have time to talk about today because of our time limitation. But this is what can give you very clear-cut specific research on options. And Joe, our webinar organizer who's listening right now, gives presentations on how to use options play every Tuesday and Thursday at 11 to subscribers. So when you subscribe, you will be able to benefit from that, as well as from John and Pete's options strategy ideas. So who this is not for? Well, this is not for the Larrys of the world who will put their head in the sand and not pay attention to what the power gauge rating and the other indicators are saying, or who think that they may be smarter and more knowledgeable than the rating or the model. But this is for people like you who has stayed on this webinar, and we're now an hour and a half into this, and we were hoping to do this in an hour, but it was such interesting conversation talking with John that we went beyond our time, and thank you all for staying. I'm honored that you're finding this valuable enough to invest your valuable time. So this is for investors like you who are serious about your investments and want to do better and make better investment decisions. So as I said earlier, we've added that screener, and we've added options play cost. The basic subscription costs $1,950 a year. We've added the options play that has this value, but we don't charge extra for it. And I didn't even get into this research, but these are, in addition to Insights Weekly newsletter that Mark puts out, these are other tools that really help with your research. I read highlighted the coaching calls because this is like so critical. We're all time poor. I mean, does anyone feel they have enough time to do everything that you want to? I don't think so. I certainly don't. So I'm looking at, say, investing in a new system, and I'm thinking, oh, how am I going to learn this? I don't have time to learn it. Well, we actually take your hand and basically walk you through it. Joe has these coaching calls every day, and you can get on one as early as tomorrow, and he will walk you through exactly how to use the system and answer your questions, and set you up with one-on-one sessions to show you how to integrate this into your marketing, into your market strategy. We've just hired an assistant for Joe, Michelle, who is also going to be helping Joe with these sessions as she educates herself on the Chaikin system, because we're getting so many subscribers now that it's beyond Joe's capability for one person to hire to handle all this. And then we have these weekly, bi-weekly forums, so that we have a community of Chaikin investors like you will be, who will get on a webinar every Monday afternoon after the close, and you can not only hear our chief market strategist and Joe's updates on the market, but you can also have an opportunity to ask your questions. So all of that is valued at over $5,800, and as I say, the annual subscription is $1,950. But we're going to add a few more goodies to the basket, and that is our morning insights. This is a Monday through Friday insight that our chief market strategist puts out with specific stock ideas, both on the buy and the sell side, and his overview of the market, what's happened last night and what he sees happening today. So it's very timely, and you basically get insights emailed to you from Chaikin six days out of the week. So instead of the $19.50, though, we are going to offer you a special price that's valid through midnight tonight of $1,650. So I hope you will take advantage of this and call this number or email sales@chaikinanalytics.com or go online at chaikinanalytics.com/monster, and that will automatically take the $300 off the sales price and give it to you at $16.50. So you guys have been an outstanding audience, and I love the fact that you've all stayed on so late. I'm truly honored that you have. So let me thank you, and I'm going to turn it over now to Joe for the Q&A, and maybe we just take a few questions, Joe, because it is so late.
Sure.
I don't want to hold these folks up any later.
Good. Yeah, let's go ahead and jump right into it. There's a question here about money flow. The question from Jerry asks, if your money flow indicator turns positive, would that be a good enough entry, or do you wait a certain amount of time for the indication to be positive before you buy a stock? Of course, assuming the power gauge rating is also positive and bullish.
It depends on the other. Let me find one. It depends on the other indicators, what they're all saying. So let's go back to a stock example here. Money flow. Okay, here. Let's go to this one. Okay, this was one example of the screener. Money flow is positive here, right? And it was negative in here. But you can see what happened when it turns positive, particularly with all this money coming in. The price really accelerates and starts taking off. But you can't look at money flow in a vacuum. You know, you need to look at it in terms of the power gauge rating. At this time, it was neutral. Relative strength was just starting to tick up as the money flow was ticking up as well. I would have wanted to wait for that power gauge rating to turn bullish like it did in October before I started to invest. But I'm also confirmed because relative strength is strong, as is money flow. And look what happens. I mean, that all turned around at 28 in late September, early October. You know, and the stock is now at 35. So look at, I use money flow in relation with relative strength, overbought, oversold, signals, and power gauge rating. In other words, it's a holistic decision. You can't look at just one by itself.
All right,
so
great.
I hope that answers that question.
Yeah, I think so.
Maybe we can take one more, Joe.
The other one was, we saw a lot of examples with buy and sell signals. There was a question here, do you have to wait for a sell signal to appear before you actually sell the stock?
No, absolutely not. No, these are just aids to your decision-making process, and they trigger when certain criteria is met. But by no means does that mean that's the only time the criteria is met. I mean, let's go back to that one on Southwest Air when I sold it at 45. That was before I got the sell signal, okay? Let's go back to this one. Okay, in the example of Southwest, I didn't have a sell signal here at 45, but I could see it leveling off. It was going sideways. It went below this long-term trend line, and power gauge is neutral. Relative strength is starting to turn negative, and certainly money flow is negative. So I said, I better start protecting my profits here and take some profits off the table, which is what I did. Now, when I got the second sell signal and relative strength had turned, then I got out of Dodge real fast. I mean, without hesitation, I just sold. And that was at 43, and it saved me from going down to 31. So use it as a guide, but not exclusively. All right, Joe. I think
Awesome.
that will wrap it up. Any questions we didn't answer can be answered by our sales force. You can call that number that Joe, you probably put that up on the screen on the box there,
Yeah.
sidebar box. The
Right at the
number to
bottom of the
call.
page, actually. Right what you're showing
There you
right
go.
now.
Okay, good. Yeah, call that number if you have any additional questions, and we have our team on the phones right now ready to answer those questions. So any that we didn't get to, please call 877-697-6783. We're happy to hear from you. So Joe, thank you. Chris and Option Monster and John NAJARIAN, thank you. Huge thanks to Option Monster. They are the most wonderful partners. We've had a long-lasting and very rewarding relationship with you guys, and we really appreciate all your support. So thank you, and good luck and good night.